What is happening? My name is JJ. You're watching Bull, Boom, Bear, Bust. We've got a lot of economic news to get caught up on, and hope everyone's doing well. Thanks for tuning into my last video where I did an outdoor video. Got a lot of good comments on that one, so thank you for all your feedback and for your tips on my little condition that I talked about back in that video. But back to the real topics at hand today. The news, the financial news, business news, the economy continues to implode. Consumers going deeper and deeper and deeper into debt. 70+% of the population right now not looking so good financially. But someone disagrees. The Bank of America CEO actually said that the consumer is strong. Let's take a look at this first article. Take a look here out of CNBC. Bank of America CEO Brian Moynihan. The latest spending and savings data shows the U.S. consumer is healthy. The problem is that directly contradicts what the Federal Reserve is telling us. The Federal Reserve is telling us that U.S. consumers' savings rate has plunged now to what they were in the financial crisis. Does that sound healthy to you during the financial crisis? That's the levels that we're at right now as far as savings goes. Here's what he said. Listen to this. Bank of America customers continue to spend freely using their credit cards and other payment methods for 10% more transaction volume in September than in the first half of October compared to a year earlier. So think about that. People are putting more on credit cards. Is that a sign of consumer strength, or is that a sign of consumer weakness? So less people paying with cash, less people paying with debit cards, more people using credit cards. To me, that sounds like weakness, but of course, it's going to be spun into a positive thing by a CEO of a big bank. Would you expect anything less? Would you expect the CEO to say, no, consumers are doing terrible right now, savings has plunged to financial crisis levels, but yet we're still going to charge them 18, 20, 22% on their credit cards, on their interest rates on their credit cards, and we're going to give you a fraction of a percent to keep your money in savings. So if he came out and admitted that the consumers were weak, then he would have to explain all these other areas where he's nailing the consumers. That's what I think about it, but please let me know what you think down in comments. Let's take a look, though, at the real data, or what the Fed is telling us, which contradicts what Moynihan is telling us here. And here it is, the personal savings rate. Look to the far right here. Does this look like a healthy consumer to you? Right? All right, folks, let's zoom in here. Let's take a look at this. And it's a little more noticeable when you look at a 10-year chart here. We see that we're down here. As of August, we're at a 3.5. And that's basically the percentage of someone's income that they have left over after paying their monthly expenses. So did anyone expect, with 40+ year high inflation, that people were going to be in a strong financial position? Yet the Bank of America CEO is coming out there and saying that. But it's more noticeable here. Look at this, where we're at as the most recent month, August. And we go back here, 2019, 18, 17, 16, 15, 14, 13, 12. This is the worst in over 10 years. In fact, let's go back out to this long-term chart here. And let's go back a little further, all the way to 2005. So how far back do we have to go to get where we're at now, the 3.5? Well, here's the recession, financial crisis, housing bubble went bust. We'd have to go back to August 2008, folks, before we get to these levels that we're at as of today. Now, of course, in 2020, the stimulus checks, the enhanced unemployment benefits, a lot of people had more money. You can see the big spike. More stimulus checks sent out, big spike. Well, what's happened since then? The cost of living is eating consumers alive. But yet we have Bank of America CEO out there telling us that water is not wet, telling us that left is right, telling us that up is down. And we see this crackdown on disinformation. For example, PayPal wanted to fine people for putting out disinformation, but yet CEOs, these talking heads, these business people, they can go out and they can say anything they want to without any repercussion. Folks, how insane is this? It's wild. It's wacky. Pick your descriptive word. The consumer is getting pummeled, as we see here in this chart. And we don't have to look at a chart to know it. I mean, how many people do you know that are doing better now than they were even just a few years ago? I don't know hardly anyone. And this is what I do every day at my job. I talk to people about their finances. I have people that are really, really struggling more now than ever before. And I'll share a little bit more of that. You know, I work in banking, and every day I talk to people about their finances. even insurance bills are cracking people's wallets. I had a customer in Florida, and insurance rates are skyrocketing there, not just for the people that went through the hurricane, but everybody, because a lot of these companies, what they'll do, if they pay more claims in a state, they'll spread it across everyone in the state. People in Florida are hurting. People here in California, a lot of us had to pay for the fires that happened, even if we didn't have a fire ourselves. We had to pay for all the homes that got destroyed in the fires. Costs went up on insurance, home insurance, automobile insurance, on top of everything else that's going up in cost. But even with the consumer out there getting punished, the stock market was in the green today. All major indexes in the green. The Russell 2000, in fact, went up over 3%. You would think that all the problems went away, that all the inflation went away, the cost of living was going down. Well, supposedly the positive news that drove the markets higher today was going to be earnings. Earnings season is here, and specifically bank earnings are expected to look pretty good, and that's to be expected. We haven't seen the tsunami yet. We've got car loan delinquencies rising, foreclosures rising, late payments on homes, autos rising, late credit card payments rising, but yet you notice they didn't talk about that when they said consumers were strong. Also, we've got that 10-year bond yield hanging out over 4%. Guess what, folks? More upward pressure on mortgage rates. So bigger home price corrections coming down the road. We saw in a few videos ago, some cities, some areas saw 5, 6, 7, 8% declines just over the span of a few months. By the end of the year, some of these cities could be down 15, 20, maybe even more by the end of this year if these rates continue to stay elevated where they're at. Of course, we're going to keep up with the housing market here in this channel. Please make sure that you are subscribed so you do not miss an important update. Now is a very crucial time to keep ahead of the curve, stay out from behind the 8 ball and stay on top of this, because there's going to be major buying opportunities for people that know exactly what to expect, what's happening. I think most of us here are going to be just fine with what's ahead of us. And speaking of the housing market and housing bubbles bursting, we're seeing more articles like this. This one happens to be out of BuzzFeed. She bought her house as the market peaked. Now she regrets it. A lot of people, they weren't paying attention. They didn't realize what was ahead. We alerted everyone here over a year ago that the second half of 2020 is when the housing market was going to come down. And that's exactly what happened. How do we know? Because they talked about raising rates at the beginning of the year, and they actually followed through on what they said. Now, I've been pretty critical on the central bank, but I have to hand it to them. They're actually doing what they said. I think they need to do it faster, and I think ultimately they're going to pivot probably early 2023. I'd say by the spring to early summer, they're going to go ahead and start cutting rates. But if we look back historically, when the Fed starts cutting rates, that causes even more panic, because then people look at that and they say, hey, things may not be that good, or things are likely not that good because the Fed's cutting rates. And that's basically the Fed acknowledging that there is a recession. They're acknowledging that there's a problem. Now they're acknowledging the problem of inflation. But when we see deflation, when markets begin to crumble, you're going to see the Fed pivot. But markets typically go down, especially the housing market will go down at least a year or two after the Fed begins pivoting, sometimes 3 years. Look at the housing bubble, and it took 3 years for home prices to bottom out, even after the Fed started cutting rates, as the financial crisis hit full swing, 2007, 2008. Home prices didn't bottom until 2012, so that shows you how deep recessions can go, even when the Fed begins to pivot and starts cutting rates and starts to inflate their balance sheet once again. So yes, this article talks about someone that their rent was going up and up and up. This was Georgia. And you see these rents going up and you say, how can it be worse? Let's go ahead and buy a home. And then all of a sudden you see the market starts dropping. Now you're underwater. And it is a sad, sad story for so many people that bought at the peak of this housing bubble. But this homeowner will be fine because, Bank of America CEO says the consumers are strong because people swiping credit cards and going in record amounts of debt, that is a sign of a strong consumer. You can't make this up, folks. And I guess when bankruptcies start hitting records and surpassing the financial crisis, also, that's going to be a good sign. That's going to be a sign that consumers are strong. Bankruptcy, that means things are going good when people file bankruptcy, right? It's upside down world, folks. Thanks for watching this report. Please like, subscribe, come back for more updates. Bye for now, everybody. Peace.